right, welcome to On the Edge. I'm Max Keiser. Let's get right to it, shall we? Time to go to Cabo San Lucas, Mexico, and speak with Jeff Berwick of DollarVigilante.com. Jeff, welcome back to On the Edge.
It's always my pleasure, Max. Thanks for having me.
All right, Jeff Berwick, are we on the precipice of another global financial collapse similar to 2008? If so, what are you advising your newsletter subscribers to do?
Well, I don't think it's going to be exactly similar to 2008. I think it's going to be worse. Basically, what happened in 2008 is that was the start of the collapse of the global financial system. This is not a free market financial system. This is not capitalism. This is basically a big, almost communist-style, centrally planned, artificial fiat currency system, which is all based on debt. So it all had to collapse. In 2008, it was on the verge of collapse, and all they did was paper it over, which is all the only option they really have is just to paper these sort of things over, to keep counterfeiting money, to keep trying to get people to think that it's not collapsing, but it is. The debts now are just at totally unsustainable levels, and there's no way to keep this game going any longer. So all they can do is keep printing money and keep hoping that no one realizes what's going on. So in 2008, that's what they did. If they didn't print money at that time, the whole system would have collapsed, which would have really been a good thing in general. This system is a terrible thing. It's engendered all wars. It's impoverished hundreds of millions of people. It's a terrible system. But they did keep it alive at that point. And now what's happened is Europe is starting to come apart of the seams again. There's just unsustainable debt at every level there. If you look at the total debt levels of all these countries, they were supposed to have under the European Stability, I like that name, the Stability Pact, that none of the countries in the euro were supposed to have more than 60% of debt to GDP. And now if you look at it, almost every single country has more than 60%. Greece has over 160%, Italy 120%, Ireland, Belgium, France, even Germany's at 82%, Austria 74%, and the list just keeps going on and on with Spain and others. So this system is in collapse, and all they're talking about right now is, will they let it collapse this time, or will they again try to paper it over and hope no one notices?
What you're describing there is, of course, deflationary, banks collapsing. How come this would be a collapse of the dollar, whereas we're seeing some strength in the dollar? Do you expect more strength in the dollar?
All these fiat currencies are pure abstractions at this point. So there is no, I don't even compare them to other currencies. There's no point. It's basically a exercise in stupidity to even try to figure out what the value of one versus another is. They're all basically worthless. They have nothing backing them. They're all based on a system based on debt. And you're right. If they would actually let all this collapse, it would be deflationary, but it doesn't look like they have any intention of letting it collapse, and that's the side that we're betting on, is that they're going to just continue to try to keep the system alive, because all of these central banks and all these governments live off this system. So it'd be quite rare for one of these institutions or these things to allow themselves to die. They're sort of like living organisms. They don't want to die. So all the central banks of the world, the Bank of Japan, the Bank of England, the Federal Reserve, have all said that they will print unlimited amounts of liquidity in U.S. dollar terms to keep this game going. So they've already announced what they're going to do, and it's pretty clear. They've been doing that for years with quantitative easing, and now Bank of England is quantitatively easing it again, and it's very clear. So we're basically on the road to hyperinflation, and that's the side that we're betting on here at the Dollar Vigilante.
Well, yeah, sure. I mean, we're on the road to hyperinflation, except for the fact that we're currently in deflation, and the bank collapse are gaining speed. The massive write-offs are needed. In other words, the amount of money printing is not as quick as the destruction of credit that's going on there in the bank implosion. And you've got, by some estimates, $500 or $600 trillion worth of derivatives, which is another fancy word for debt. All of that's collapsing. And so I understand gold is going up because gold is a currency and everything is deflating against gold. But I don't understand how you can call this hyperinflation, because the only thing that's going up in prices are some retail stuff. But other than that, everything else across the economic spectrum is collapsing in price. And soon, when retail prices start collapsing as well, then it's not even inflation, much less hyperinflation.
Well, I come from the Austrian School of Economics, so we don't look at inflation or deflation in those terms. We look at inflation or deflation in terms of the money supply. And right now, there is no signs of any deflation anywhere. The money supply is increasing all over the place. The place that it's increasing the slowest, though, is the Eurozone, and that's why they're having problems right now. But they've already said that all they're going to do is keep printing to keep these things alive, which is inflation. The prices that you see on day-to-day life, they may go up or down, and it is possible they could go down for a period of time. But in general, this money supply is increasing. I'm not saying that we're in hyperinflation right now, but we're definitely on the road to hyperinflation if they keep bailing things out, and that's what they've been doing. They've allowed nothing to collapse to date. Sure, there's some credit contraction, that sort of thing, but they've already announced that they're not going to allow that to really happen. They're not going to allow these things to go insolvent. And if they did, it would basically collapse the entire financial system, because it's all so intertwined now and so interlinked that if they let some of these things go bankrupt, it would bring down the whole system. So they really have just that choice, and they've already announced that's the choice they're going to make, is to continue to print. That right there should be a wake-up call to those who think that we're headed for a deflationary crash. We don't live in the kind of world where you can have a deflationary crash if they don't want it. Back when money was tied to gold, you could have these sort of things, but now they can print up as many currency units as they want, and so politicians have the choice, and central bankers have the choice. Do we let it all collapse, and we preside over the biggest collapse in basically human history, or do we print a little bit longer, get out of office, and hope we can get away before everyone notices that the whole game is going to collapse? It has to collapse either way. It's just, do they let it collapse, or do they print money to the point where the currency becomes worthless? And we're still betting that they're going to print money until the money becomes worthless.
Right. Well, without any money circulating, of course, you can print all the money in the world. It doesn't mean anything. The money supply could go up 10,000%. If it's not circulating, it doesn't mean anything. If you have a corpse and he's dead, and then you give the corpse a blood transfusion, and you speed that blood around the corpse at 1,000 miles an hour, it doesn't change the fact that the corpse is basically dead. But here, of course, we're not talking about it speeding around at 1,000 miles an hour. You're just bloating a dead corpse with more dead money that goes nowhere. There's an old saying on Wall Street, if wishes were knishes, we'd all be fat. And I'm sure Ben Bernanke would love a little inflation, but he can't seem to muster it, no matter how much of this fiat money he pumps into the dead corpse of the American economy, the global economy. But let me ask you something about this quantitative easing, because we had quantitative easing 1, quantitative easing 2. People were then expecting quantitative easing 3, but then we got Operation Twist. Is Operation Twist an increase in the money supply?
Not for the way I look at it. They're basically just going to swap things around. It's not actually an increase in the money supply. They're just going to change various things. It won't actually end up as an increase in the money supply. However, I think the Federal Reserve has many ways to increase the money supply without doing these things. There's over $1.6 trillion in bank reserves in the U.S. All they need to do is somehow get that money into the system, and there'll be massive inflation. They don't need to do any more quantitative easing. The banks have so much money in reserves that all they need to do is to give them incentives to start putting that into circulation. Right now, they pay those banks interest rate of 0.025% to keep it at the Federal Reserve. All they have to do is take that incentive away, or even put it as a negative, and those banks will start basically buying treasuries is probably what they'll do, because most of the borrowers in the U.S. now are so indebted as well, and the economy is so terrible that there's too much risk to actually lend it to any people, and that's why they're not lending it to people. But there is one big lender they can lend it to, a lender that needs, or a borrower that needs over $1 trillion per year in new money, and that's the U.S. government. And so we don't need any more overt quantitative easing at this point to keep this inflationary game going. This can be done by the banks now at this point.
Jeff Berwick, I was reading in the Financial Times recently that China is getting very nervous about their Fannie Mae and Freddie Mac investments. If you recall, going back to that 2008 period or so, part of the recapitalization of the U.S. economy was to get China to pour lots of money into these GSEs, the government-sponsored entities of Fannie Mae and Freddie Mac. Is China correct to be nervous about these investments, do you think?
Well, it depends what they are interested in. For example, they'll get paid back their money, but they'll be in worthless dollars. These are all basically, this entire U.S. financial system is a completely corrupt financial system, all based on debt. And so when you have a system based on debt, you're going to have the entire system become over indebted at some point. And that's exactly what's happened. So the U.S. government, instead of letting Fannie Mae and Freddie Mac die a few years ago, they just papered it over. And now it's still on the verge of death, and so there's no chance that Fannie Mae and Freddie Mac are going to say we're not going to pay you back. They'll pay them back, but they'll pay them back in more, worthless dollars, and they're basically going to keep papering these things over. We're at a point now where they can't stop these bailouts. If they stop the bailouts, the whole system collapses.
All right, Jeff Berwick, you recently spoke at a conference, When Money Dies. Is the euro about to collapse? And so give us your take on the euro. You've said that all fiat monies are equally suspicious and none of them are worth anything. But what's your prognosis on the euro? Is it going to remain intact or will it split up?
Oh, it'll definitely split up. It'll definitely collapse to zero. It's just a matter of when. And I believe the euro will probably be one of the first to collapse, and I think it'll be one of, we could even see the U.S. dollar survive a few more years as everyone runs to the U.S. dollar after the euro collapses. But none of these things, the euro has only been around for 10 years. If there's anything that's really shocking to me, it's the amount of apathy by people in the Eurozone to what's going on. We have a currency here that's really just been around for about 10 years, and it's already on the verge of collapse. And you don't see people rushing to get out of euros at all costs. I've talked to many people in Europe, and they say, oh, well, I'm sure they'll figure something out. And just the amount of apathy is just unbelievable. There should be just an incredible run out of the eurozone into things like gold and real assets, but there isn't at this point. I think what they'll do is they'll paper over these things. They might let Greece go. Greece is small enough that they could probably let it go and it wouldn't collapse the whole system, but they can't let Spain go. They can't let Italy go. These are just way bigger economies and way bigger debt amounts that will bring down the entire system. So they can maybe let Greece go, but even that, you've seen they should have let Greece go a year ago or even longer than that, but they haven't because they're really scared of what the repercussions will be. They're scared of that 2008 style collapse. And they should be, because that's basically what would happen. But I think it's gotten to the point now where all the central banks have basically said that they're going to put in as much money as is possible so that none of these banks have to collapse. It's basically just keeping a bunch of zombie banks alive a little bit longer. But it will collapse for sure. I can't see the euro lasting more than a few more years. There's just no way. And the U.S. dollar is the same boat. All these things are in the same boat. We're looking at debt levels. They're just massive now. If you look at the total amount of debt and liabilities of the U.S. government, federal government, it's $75 trillion. That's $250,000 per person in the U.S. or $1 million per family of four of debt and liabilities overhanging them. This is completely unsustainable, completely unpayable, and it's only just getting worse and worse. The Obama administration's just, escalated and sped up the amount of time that they're printing money. They've gone into huge deficits. Back even 10 years ago, to have a $100 billion deficit would be big. Now they have $1.5 trillion deficits. This whole system's in collapse. We're basically in a period of collapse, and all they've done to date is basically just print money. And so it's definitely an inflationary collapse. You may not be seeing it necessarily in prices at the moment, but the money supply is expanding at great rates. And that's always the case with hyperinflations. If you look back at Weimar Republic in Germany and you look at their hyperinflation, even after the currency had been increased by 100 times, many economists were saying there's not enough money in the system. They start talking about these Keynesian debt traps and all these liquidity traps and those sort of things. But it's all nonsense. This whole Keynesian economic theory is completely been debunked time and time again. And at this point, with the amount that they just keep printing money and they keep referring to this Keynesian theory, you have to think that the economic school of thought of Keynesian theory is not really an economic school of thought. It's basically a form of serious brain damage when you keep doing the same things over and over again, expecting different results.
Well, let's couple of things there. Germany, of course, now they've just reported recently that their export business was triple consensus. It's up 3.5%. and they're doing fantastically well. As the euro remains cheap, it's great for Germany's export market. A lot of people speculating that Germany loves the chaos in the Eurozone. They're only getting stronger. And ultimately, if there's a federalization of the Eurozone, they'll end up managing it out of Berlin. And it's a great source of income for them. And the second point is that you talk about Keynesianism versus other schools of economic thought. What was missing during Keynes' time, of course, was this computer trading and algorithmic trading. Now, today we know that the bond market prices are not the function of supply and demand. The stock prices and the S&P futures and the gold and silver market, this isn't the function of supply and demand in the marketplace. There's no price discovery in the marketplace by people buying and selling securities. This is all managed through computers by centrally planned command and control bureaucrats in Europe and in Washington, and they have unlimited access to an infinite amount of credit. So they can keep the price of these securities whatever they want them to be for as long as they want them to be, as long as they continue to get rich and everyone else gets poor. So what's going to break that monopoly up?
Well, it's basically this system had no chance of ever really surviving very long. We've only really been in this fiat world for 40 years now, and it surprised a lot of people it's lasted this long, but it's all basically in a period of collapse. Now, you bring up a point about Germany, and you're correct. They definitely have the strong hand in Europe. They're by far the most productive area, and they hold most of the cards in what's going to happen and what's going to play out. I don't know what's going to happen. I don't think anyone knows exactly what's going to happen. I think that in general, a lot of the sort of financial elites would like to see some sort of a one world government type thing, or a big consolidation of the governments, making the Eurozone. They've already talked about making the Eurozone one fiscal area, basically making them more like one area. I don't believe in any governments at all. I believe that governments only ruin things, and all these things are basically all government solutions. If we were allowed to just let the free market happen, we would all see huge amounts of prosperity. But of course, we have to get over this entire governmental system. We live in a completely non-free market world right now. There's nothing free market about the world. There's nothing to do with capitalism here. This is all corporatism or fascism or even various extents of communism. And so we just have to get through this. We're going to see this continue, these sort of crises. There's not going to be an abatement of it. There might be periods where people are fooled into thinking that it's okay when they paper it over so much, and they did that after 2008. But we're in a massive period of decline right now, and sure, there might be areas that look like they're doing okay, and I'm not saying that productive people won't always do okay, but as far as the financial system goes, and as far as these countries go with all their debts, these all have to collapse. And they're in the state of collapse right now. And so it's just a matter of when. And I think we're talking a lot sooner than later at this point.
All right. Well, of course, it's tough to make the case against government per se, because there is no government either. It's been co-opted by banks and corporations. And what we now, and through these Occupy Wall Street protests, people are starting to finally figure out that it's not the government that's the problem. It's the banks that own the government that's the problem. There is no such thing as government anymore. We have only kleptocratic bankers who are draining the system of cash. So what do you think the Occupy Wall Street protesters can do, if anything, to reverse this trend toward banker-led oligopoly and kleptocracy?
Well, it's very interesting what's going on in with this Occupy Wall Street. First of all, I was quite thrilled to see finally Americans waking up a little bit, at least to some extent, as to their enslavement. Americans, more than any other person in the world right now, except for possibly North Korea and Cubans and a few of those sort of places, are enslaved. They're not even allowed to leave, really, their country without having to pay taxes, basically forever, to their home tax farm, their government. So I was happy to see that there is at least some awakening up there, and finally the apathy has ended in the U.S. However, when I look at a lot of what I'm hearing coming out of that camp, and of course we're talking about so many different people, and it's really difficult to generalize, But when I look at what I hear, and a lot of their statements are things like they want a higher minimum wage, or they want more government regulations and controls on the financial system. That's completely the wrong way to go, in my opinion. And just the fact that people like Nancy Pelosi are supporting Occupy Wall Street scares me. A lot of the things they're asking for look like it comes straight from Karl Marx at this point. It's looking like sheer communism. These people aren't asking for freedom, for free markets. They're asking for more government involvement. The government is one and the same, you're correct, with the financial elite, these financial banks. And they basically work together to basically steal and enslave people and rob them of wealth. But to put more control in the hands of the government is ludicrous to me. We have too much government, and the government is the problem, in my opinion. The government is these big banks. And I'm not talking about Bank of America so much as I'm talking about the real financial elite, the Rothschilds and Goldman Sachs and those sort of people and those sort of level. Goldman Sachs basically institutes its own Treasury Secretary every few years now. So that shows just the level of extent that they're basically tied together. But to give the government any more control out of this is insanity, in my opinion. We need to get the government out of everything.
Let me cut in there for a second. So, let me give you the analogy. The Occupy Wall Street crowd is losing the game against the bankers. What you're suggesting is to kill the referee. What I'm suggesting is, what's the strategy? I'm asking, what strategy do they need to actually win against the bankers, aside from just killing the referee, which is your suggestion, to get rid of government?
Well, the referee never does anything anyway, so I don't understand. Throwing people in government jails isn't really going to solve a lot of this.
Without a referee, there is no match. In other words, you need a referee to have competition. We're both pro-competition. You need a referee to have a competition. Okay, so getting rid of the referee creates you don't have a game anymore. So here's the new game. It's the game of savers versus speculators. The savers are the Occupy Wall Street crowd. They're getting screwed by the speculators. How do they win against the speculators if we're not going to just kill the referee, which I don't think makes any sense?
I actually don't agree with that. I believe that you don't need a referee. I'm an anarchist.
Okay, well, that's all the time we have. Jeff Berwick, thanks so much for being on The Edge.
Thank you.
All right, and that's going to do it for this edition of On the Edge with me, Max Keiser. I want to thank my guest, Jeff Berwick of dollarvigilante.com. If you'd like to send me an email, please do so at ontheedge@presstv.com. Until next time, this is Max Keiser saying, bye, y'all.